Hello, here I would like to show you how you could have used the Pro Suite software to locate a very good, nice short this morning in the crude oil market. So first of all, let's talk a little bit about the actual context of the market, and I'm gonna switch to the daily chart here. Take that here. And go over there. Okay, and now here you are seeing the daily chart from the Pro Suite package. What you are seeing right now is obviously balancing areas, and the market actually is in a balance situation. The top of the balance 49.33 and the low of the balance 46.62. We're right in the middle here of the balance. If we switch to the weekly and the monthly charts, you can see here on the weekly as well as on the monthly chart that we're trading also in a balance area, a huge a balance area that has been in effect for a long time now. So that is the situation for the longer term chart, all in balancing areas. Now we're going to switch to the market profile chart from the Pro Suite software. And now to add more to the context, we're going to look at the inventories now for the market. They are what is very interesting for day trader are the short-term inventories. And the short-term, and there are two kinds of short-term inventories. You have the short-term day trader, as well as the overnight trader inventory. So here you can see on the green profile, which has been split here on the right, is Friday's market. So the market was going up on Friday. That was a big up day. So we can see here that probably there are long stock here at the top from Friday. So the short-term day trader inventory was long at the open this morning. The orange profile here is the overnight market for crude oil. That was the close from Friday here at this level, the 48 to 73. So most of the activities in the overnight took place below. So we have a probably here a situation where the overnight inventory is short. So in that area here, we have long inventory from the short-term day trader, and we have short inventory from the overnight market. So, and we open right here. This is today's market here, and it has been split here on the right, and you have the full profile on the left. So we open here on the A yellow letter. So right at the open this morning, you can see that the guys that were in trouble inventory wise was the short-term trader from Friday, and the first move was on the upside, and we traded right at the POC from Friday before starting trading down. So it was kind of in this as of this morning at the open, we traded up and down. But one thing you can be sure of is that the guys that were in trouble this morning were the long from Friday, not the short from the overnight. So just based on the inventory, when the market's starting trading down, it was a selling opportunity this morning. So in C letter, when the market opened right there, we traded up. You can see that right now because all the weak sells here have been erased because we traded through. But before going up, there were a lot of weak sell here around the P high, which was telling us that the selling was weak. It was being made by weak trader, not the stronger, longer term trader. So we took this guy out and we traded up just above the open at 48.50, and we start trading down after that. The opportunity was right there around the open this morning. Why? Because the guy that were in the most difficult situation were the long from Friday. The short from the overnight market were in the money, and if we could have pressured them if we would have traded higher above the 40 48.68, which was the overnight halfback, something like that. Now you could start put pressure on these guys. But when we traded up on C, I think that the trade was on the downside because these guys that were long on Friday, when they saw the market traded down, what do you think were in their mind when the market traded up back to around where they bought the market on Friday? I think that the first instinct would be to sell the position because they are not in the money, and they are suffering a bit, which was not the case for the overnight inventory. And you also had a closed stop because you're selling around the open there, and your stop is above the overnight halfback or something like that, you know. So and the market started to trading down, and that was the good opportunity. That was a good risk reward trade here. One thing I would like to mention also is this gray line that I threw this morning. It was the pullback, the late pullback from Friday's market. So trading above this late pullback level would tell us that there have been no change for the market since Friday. So Friday the market was trading up big. It was positive, bullish. So trading above that level would have kept that scenario intact. But starting trading below this level, it was showing that a possible change could happen to the market, right? So you had the fact that we traded below that level, and the inventory condition that was creating this shorting opportunity this morning. So that's about it for this big short trade on crude oil this morning with the ProSuite software.